The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. Well, the first chart that I've placed into Tiger TV today is the chart of the New York Stock Exchange Index, because that is the best one for looking at the total stock market. As we've talked about many times here, that it is cap weighted and it has over 3,000 issues of the largest stocks in the world. They're not just U.S. stocks, they're also large stocks from foreign countries. The main thing is we hit that 61% retracement the other day. We did not take that out from Monday. Here we are into Thursday, so we're into our third day of a rally, and we're really starting to move upwards. The problem is it could stop at any time. When we go below that 61% retracement, folks, you don't want to be long. But right now, it's in the midst of a bounce. It was not unexpected because we had the volatility index go up to that 20 level like we expected. It bounced right off of that line. Basil was talking about it the day before it happened also, and it's backed off 3 points from that line, making some type of a correction. But I believe this is a bounce in the market. How much it's going to bounce, we'll have to wait and see, but it could be substantial. But we'll have to, just like we say, wait and see. It could go all the way into Tuesday, maybe even Wednesday. So we're looking at Thursday, Friday, and 3 more days, a 5-day rally, and that would, I would think that would be the end of the rally that we get. But as I said before, we could stop pretty much at any time. The Treasury bonds were pretty much telling us that there was no flight to quality at that time. So we were, watching that along with the VIX index and a few other things to tell us that there could be a rally coming here in the market. But overall, it still is very bearish. And the question is how much we're going to rally and for how long. And no one knows the answer to that question. We've had some pretty good volatility in some of the things today, especially the euro. The euro went down to the 786 retracement and then had a very, very strong rally of well over 120 points, which I think helped start the rally in the stock market in some respect. I'm going to start the program today officially with the commodity department, is because of the price of copper. We've been watching that for quite some time, and we did go down to the 786 retracement in copper 2 days ago. We were talking. Hold on one second, please. I don't know what happened to these charts, but it's very frustrating when they disappear on me. Well, I'll have to get copper again. Just give me a second here. I got to love the computers. And then we'll get started again. Okay, if I can't find it, I'll just move on to something else. It should be right here, but you'll never know. There it is. Let's see if we can get this little puppy working. Okay, bear with me here 1 second, and we'll have copper up and running. If you have any questions, it's 877-927-6648. And we will put copper in here, and you'll see that we did make a really nice Gartley up in this area of the 319 level the other day. We're already 4 cents higher in that, and I'll be posting that into Tiger TV in just 1 second. It'll only take me one more click of a function here, and then we'll be able to see the chart of the Gartley pattern. Now, we've had higher bottoms now in the copper going back to July, and we made one higher top up at the 345 level. So this bounce that we're getting could go all the way up to the $3.30 per pound level. in copper, and still be quite bearish, because long term copper, as you know, has a very, very bearish tone to it. As you compare it with the New York Stock Exchange, which we've been mentioning many times before, I'll put that in just for memory. You'll see that we've been in a downtrend in copper since 2011, and we've been going straight up in stocks since 2009. So that's telling us that, you know, they're not using as much copper. Whatever they're doing, they must have found a substitute for it, or they're not making as many products as they were with copper. One of the two is probably going to be the answer to that question that history will answer for us. We'll have to wait and see. Now, I want to show you something. You folks, you think there's volatility in a market. I have to show you this chart that I have not followed this. I have not traded it. I'm just watching it. But you'll have to see the chart that I'm going to put up on is a 5-minute chart of natural gas. It's a commodity traded on the ICE exchange. And if you'll see these large swings here from 5.7 down to $5 and then up to 5.4, the first swing up was $5,000. The second swing down was $8,000, and the next swing up was $5,000. Folks, this is a 5-minute chart. That happened in a 7-hour time frame that it moved that much. That's the equivalent of the S&P moving over 100 points up, 150 points down, and 100 points up in a matter of a few hours. So this is not for the light of heart, but if you like action and you need your digitalis or your pacemaker to be stimulated, this is the one you want to go to, because boy, it really trades wild. And not only that, but I've watched the volume in it, and it's all traded by 1, 2, and 3 contracts. You don't see 30 and 40 contracts or 50 contracts in there. So it's someone that whoever's trading it, they really move that market quite a bit. It's been the wildest mover that I've seen since eggs traded back in 1972, and that was a crazy one too. But the margin on eggs at that time was only $200, so you could lose $200 in a matter of minutes. That was long before the CFTC, so it was certainly a lot different scenario than that time. Now, I wanted to mention the next commodities that I want to follow, because I follow this all the time, and it's really one of my favorites, and that's gold. But what I'm going to do is I'm going to put in the relationship between gold and silver, because silver had been lagging up until a few days ago, and then recently silver has actually taken over. As of 2 days ago, it's actually had a little bit more strength than gold has. Now, that could be due to the illiquidity that we've had in the silver market. There's not many new buyers coming in. The volume is drying up. Those are not things that make for a bull market, but they do make a thing for short covering. And when you see these markets with these long tails, that's pretty much what's happening. If you have any questions, it's 877-927-6648. So we'll keep an eye on the silver. If silver can get above 2040, it can start a pretty good run, and gold has to get above 12,000. Excuse me, it's above 12,000. It'll be definitely in a rally mode. But if gold can get above the 1,285 level, it has a chance for a pretty good breakout. Now, if I look at the chart of gold on the daily basis, you'll notice here that we've had lower highs here for the last several weeks. The silver line, you can see that is still in much of a downtrend. It is diverging from gold. It's just been the last 2 days where silver has popped up, and I believe that's just due to the illiquidity that happened in the silver market, because it left big tails. In other words, the market would go up and hit a high price like at 2010 or 2020, and then automatically drop down to 1980 in just a matter of minutes. I mean, just faster than you can shake a stick, and that's the type of action that you're seeing in the natural gas market. I mean, that market is really wild. It follows the patterns nicely, but boy, it's the wildest thing I've seen in a long time. When a market can move that much in a short period of time. And I know that it's weather related, or at least that's what they're telling us. But we'll have to wait and see if, in fact, this is going to be, going to be the main event here as far as whether this continues in the silver market, that it keeps following gold or leading gold ahead with no volatility. It'd be very unusual that it would be able to do that, but we live in unusual times, so there's no question that that's something that could be happening. Now, since we were on gold, I wanted to bring up the gold stock that we've been watching, and that's American Barrick, because it's pulling back right off of the 786 retracement that we were watching 2 weeks ago, and we went up to that 1984 level, and now we're moving down into the support of around $18 per share in American Barrick. So if gold is really good, American Barrick shouldn't get below $18 a share, because it has a small ABCD pattern there at that time, and it is making a small Gartley from a previous low that we made back in early January. It's a very distinct Gartley pattern, and so it's something that we have to, keep, have to respect if we respect these patterns at all, which we do. And so this is the spot where you want to be taking a look at American Barrick, potentially from the short side. So, let's reverse that. American Barrick from the long side. It was bullish down there at 15, and when we got up to 19, which was a 30% move, that was a 786, and over the last 2 weeks, we've just made a very minor, 5% correction, and so that still gives it a bullish bias. Both gold and silver have held major support down here, as we mentioned, before. But right now, that's what we're looking at as far as the market holding up into that area of resistance or support. Actually, we're looking at resistance when it's down at the 2040 level, and support when it's down at the 1850 level. So that's what we were keeping our eye on when we were watching these things. We've got the Dow Jones up 154. We've got the NASDAQ is up 47. And let's see what else we have going. We've got copper is up a little bit that we talked about before. It's having a pretty good move. Bonds we're going to talk about certainly after we get back from the break here. But the bonds was one of the reasons why we thought the market was going to have a pretty good rally, was the fact that the bonds were able to back off from that level. So we'll be back right after the break.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and we've got a call from sunny Philadelphia. John, are you there?
Larry, I want you to know yesterday with the sleet, freezing rain, and ice storm Philly had, something like 700,000 households were without power in the metro Philly area yesterday. So, pretty.
Well, we were aware of that because we were speaking to our grandchildren, and we were aware of that was going on. And boy, that's a tremendous thing. There's something else happened today is that eSignal had a major problem with their data for 4 hours. They couldn't connect to the internet. They wouldn't tell us what was wrong, but I heard from one of the little Tweety birds that it was someone had hacked into it and compromised the situation. And boy, it's very scary when you start to hear things like that happening to our financial markets, because we're so dependent upon data now and instant access. You know, we don't have to work with ticker tapes like we used to when I started trading. Everything is a lot different. So anyway, what can I help you with, my friend? Or
Larry,
what can you help us with?
I'm sorry?
What can you help us with?
Yeah, I wanted to check in with you on beans, but before I did, the euro. You mentioned the euro had a nice pop today. The euro has been in a range, pretty much the high end 138, the low end 135.34, and it's been largely trendless. It's had, intraday moves, but no trends for months now. My question to you, when markets exhibit that sort of behavior, do you as a trader continue to trade them just looking for the very short term, or do you just stand aside waiting for a market to begin to trend?
Well, I don't really care about the trend, John. The trend is determined on what time frame you're looking at. If you have higher bottoms and higher tops, you're in an uptrend. Lower tops, lower bottoms, you're in a downtrend. So what I try to do is, no matter what time frame, and I don't go under 15 minutes because I don't like to be in front of the machine very much. So if I see a very nice Gartley pattern on a 15-minute chart, I'm certainly going to take that. Especially when the market's, like bouncing around between, 138 and 133 or 134. Sure. I do that in the grains. I do that in gold, especially gold. I mean, gold bounces off numbers, almost like magic. Like today's high was a perfect 61% retracement of the high we made yesterday up at 1275, and it broke $1,300. I mean, that's not like natural gas, but it was still a substantial move in gold of $1,300. So that's what I'm doing, and I try to do the same thing in stock indices futures, but I don't get concerned about the trend at all.
Gotcha. Very good. Thanks for sharing that, Larry. I'm noticing two things. First, on the daily bean contract, soybeans, the spot contract March beans are currently at $13.30 a bushel, kind of near the high end of this range that beans have been in for 5 months, $13.50 high, $12.50 on the low side. Do you, on these spot beans, do you envision any breakout occurring either above this $13.50 high or that $12.50 low?
Well, we have some lower tops now, but we had a perfect Gartley 2 weeks ago that we talked about. In fact, you were the one that brought it to our attention just a few weeks ago when we were down about $1 a bushel lower than where we are now. I posted it into Tiger TV. It was a perfect Gartley at that time, making a perfect 61% retracement, and we've rallied well over $5,000 now. But we've come so fast, so quickly, I think that we could back off just a little bit, but it has an overall appearance of being very, very bullish. And the new crop soybeans, the Novembers, they have a tendency to come off of a very, very long-term downtrend line that's gone back for quite a while. That's the beans that won't be planted until May, and so that's got the possibility of something really big happening too, but that won't be until the spring.
Indeed, Larry. In fact, you and I spoke about that earlier in the week, and just for the record, I had actually purchased the November 2014 beans. What I can share with you, what I've always found profitable to do, is that the start of the calendar year, so January 1st, 2014, I started monitoring the patterns and the daily and hourly charts on the new crop corn and beans the first of the year. Now, of course, those crops don't get planted until, the April-May time frame, but volume does...
John, we got to take a break here, my friend. Stay with us, okay? We'll be back after the break.
Sure, very good.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. John, are you still there?
I am, Larry.
Okay, you were going to mention something about November beans. We were on that subject before we had to pay some bills. What were you going to tell us?
Yes, sir, Larry. What I find fascinating and potentially opportunistic is that November bean contract, the beans that will begin to be planted come April, May, those had declined from something like $12 a bushel down under 11 to a $10.88 low, and currently around $11.20. So you can see the beans for delivery next November, $11.20, are trading a full $2.30 cheaper than the beans that you'd like to consume today, $13.30, $13.40. And of course, the thinking there, the pricing in the markets, is a function of the expectation that lots more acres will be planted in beans, and that the crop that does get harvested at the end of this year's growing season, will fill up the inventory supply, and prices will be lower. But with this bean contract having come down, the beautiful thing is here that first at that 1090 level, it made a beautiful ABCD target, or went right to that targeted zone and has turned up. And if any sort of surprises occur, like fewer acres planted or growing weather planting weather or growing weather is less than ideal, we could, have a bull phase, and of course, who knows where that can go. But the entry point here, as I saw it, was just a beautiful setup. So wanted to share that and see what you thought about that same subject.
Well, I agree with you, because when it was making that low, we were making the Gartley pattern in the old crop beans, which the March and July beans, and I agree with all of that. I do, if the weather does become effective, and we're also, have to wait and see how the Argentinian and Brazilian crops come in, but because they take about 33% of the business of soybeans around the world. But you're right, we got a nice spring coming up here. And with this cold weather we're having, anything could happen. So we're having abnormal weather, and that'll probably continue for the rest of the year. I've said that the volatility that we're seeing in these markets is going to continue for quite some time. Maybe it's because of the year of the horse. I don't know.
Indeed.
Anything's possible, so we'll see. Well, listen, Johnny, thanks for calling in, my friend, and give us a call again, please. We'd love to hear your information, and I know what you're doing because you send me ahead of time, so you walk your game, buddy. Keep it up.
Larry, thank you.
You bet. Thanks for calling in. Okay, we've got a caller from New Jersey. Dan, are you there?
I am, sir.
You didn't get stuck in the traffic over there, did you, on the bridge that they're talking about, the bridge gate?
No, no.
Oh, that's good.
Abuse of power is a beautiful thing, isn't it?
Oh, it's everywhere in government, that's for sure. What can I do for you, my friend?
Larry, it looked like I was in UVXY, and I'd sold it, and I actually did okay on 2 trades on this.
Can you tell me what UVXY is? I know it's probably an ETF for something, but I don't know what it is.
It's a volatility-based ETF.
Okay, good. Yeah, I took a look at it, and it's had it's probably triple weighted or something. Is that correct?
It's a double.
Double weighted, okay, because it made a beautiful 1.628 expansion up there yesterday. That was when the volatility index that we look at, the VXX, was up around that 20 level, and we were expecting it, to back off from those multiple highs that we had in here. So I would take a look at this again if it gets down to about 78. It's trading at 88 right now. It's dropped from 108 to 88 in just one day. So to get to 78 is not a big thing, but I'd take a look at that again at 78, because that has a long-term bottom that I think came in around January 23rd. That's what it looks like to me.
Okay, because that's exactly what I saw. 1.618.
Mm-hmm.
And 78 is the number that I was looking at. But is that the retracement from?
Yes.
Let's see, the 786, right?
It's a retracement from the $60 level all the way up to the 108 or to the 98 level. Excuse me, to the 108 level. That's 40 points. So the 61% tracement back would be 30 points. So you subtract 108. Minus 30, that takes you to 78, and that's a 61% retracement of the move. That's where you'd want to be looking to buy it again.
All right, Larry, that's great. I appreciate the help. And one other thing is this is like the first time that the 50 or the 9 and the 50 moving averages haven't even touched since about June of last year.
Yeah, I know. It's been a long-term downtrend in that thing being, double-weighted like it is. The volatility index itself lays flat, but these multiple-weighted things can really, they can help you when they work, and boy, they can really spank you if you stay in them when they keep going down. So I hope you use a stop in those things.
I do, but I have been spanked, and I've learned my lesson.
Well, there's many lessons to be learned, my friend. The teacher has many nephews, cousins, and nieces, so you're always learning. Never forget that. Trading is a journey. It's not a destination.
Hey, Larry, I just want to tell you, I really do appreciate your show, and I got to tell you, it seems like the best contrarian indicator I've heard on your show is when the guys start to call in and really bust your chops. That's within about 2 days of a serious turn.
Well, I don't know about that, but I don't really take it. I don't take it personally at all. But I appreciate the kind words and everything. But I've been around here. I've been in this business so long, Dan, that it doesn't really bother me. It hurts my feelings for maybe a few seconds, but then I just shake it off and go on to the next one. I mean, we've been so fortunate in our family to be in this business, and it's really great. As a matter of fact, yesterday we received an incredible gift from one of our friends and also a TFNN listener, some wonderful special oranges from Florida. So it was really a real joy to see that. And you get a few bad things, but when they throw fruit at you, you got to make salad. That's basically what you got to do.
All right, great. All right, Larry.
Thanks for calling in, Dan, and a Happy New Year to you, and I hope that you don't get stuck on the bridge if you're there.
No, I'm good, thanks.
All right, my friend. Thanks for calling in.
Bye-bye.
Okay. All right, folks, let's go on and take a look at the old Treasury bonds, because I think that's the one that is going to be a key to what's going on. We had some really nice moves in that. If I can just move my cursor the right way so that I can get everybody into the picture so we're able to see it all together. And I'm getting closer, so bear with me. Okay, we're almost there. And as you can see, the Treasury bonds over the past several weeks made a really nice double ABCD pattern up there with a 3-drive pattern. And what's interesting about this is the fact that the ABCD patterns were 1.27 expansions of each other. In other words, you multiply the CD leg by the AB leg, because that means the market is accelerating faster. Whenever the move goes from AB very, very quickly, you should assume that the CD leg is going to be an expansion. It's not going to be 1-to-1. It's either going to be 1.27 or 1.618 to 1. Now, how do you know whether it's going to be 1.27 or 1.618? You don't know. What you have to do is to try to find multiple numbers. In this case, we had 2 of them that came in at the 1.27 number, and that made it a little bit easier. And right now, where we are is we're setting right at the 50% retracement of the move that we made from January 22nd. That was the day, I believe, that the NASDAQ topped. So we're at that 50% level now in Treasury bonds when it hit the 133 level. So that's what we're watching here. So whether this is going to continue or not, we believe longer term. We'll put the daily up here to let you folks take a look at it, because on the daily chart, I want to do a weekly to make sure show you where we really could get to. Give me 1 second here, and I want to put the longer term chart up here just so you can see that if this thing really gets moving. And believe me, I'm very, very bearish bonds long term, but they're so oversold. We've been down for so long. We could easily get up to the 135 to the 138 level in the bonds. That's another 2 to 5 points higher in Treasury bonds. But right now we're in the midst of a sell-off, and that sell-off should probably hold the 133 level for at least a day or so, but then head down to maybe the 131 to 130 level in the Treasury bonds. The question in the stock market is how much more is it going to rally? No one knows the answer to that, but all we do know is that I believe very strongly that we are in a very bearish market. The question is whether it's going to rally for 3 days, 5 days, or 10 days. We really don't know the answer to that. We do know that there was a pretty good bottom that came in here the other day, but we have to still be able to say that we've got to, be able to give it a little bit more room to rally, because it's really, it made the bottom on Monday. We didn't make a lower low 2 days ago, and now all we're doing is we're making some retracements of what we've done before. I mean, when the market can come down from 148 to drop 110 points, it can certainly rally back 30 to 40 points back, and that's just a 382 retracement, so that should be expected. in the stock market. That's nothing mysterious, about that move. We have a question from one of our folks in the Tiger Den, and that is the chart of crude oil, because we've been waiting for a breakout to the upside in crude oil. We've been in a pretty strong uptrend here since the middle of January after we came off of the 786 retracement, and now we have broken out above the 99 level, and it looks like we're heading towards the 102 level in the crude oil, which would take us up to the ABCD swing that we just completed from early January until just a week or so ago. This market is still bearish long term, and if it does get up to that 101, 102 level, I believe it will offer an exceptional shorting opportunity, because long term this has some very bearish patterns that are there. Remember, the old high was at 143 back in the days of before TARP. So we made another high at the 120 level, another high at 112, and this other one coming in would be 102. So we'd be looking at a lot lower highs, and that would be telling us that we're most probably getting ready to head lower. But until that happens, we'll have to wait and see. We still have to get up there, but right now it doesn't appear that it's going to do that. What I wanted to show is the if you'll give me 1 second here, I wanted to show you the longer-term crude oil, because it has, going back to 2011. Actually, that's what I want to see. Hold on 1 second. I was finally able to get it all up in one chart. There we go. And you can see that we've had lower tops since 2007. And basically that's what we're looking at now, is to get one more lower top up in that 102 level, and then I think we'll be able to take a look at it from the short side. But right now I'd be looking to be a buyer in it on any corrections, because that's been the best thing to do in that market, is to buy the corrections when they're offered to you down at that level. Now, crude oil, when we had this terrible cold spell here, has not rallied very much. We had a really strong rally in the natural gas market, of course, but the crude oil did not rally very much at all. And usually when that occurs, it's telling you that the supply of crude oil must be pretty plentiful if they can supply all the extra oil that has been used all across the United States. I mean, it was down in the high 30s here in Arizona last night. So it's really something that is something that's very, very important. Now, we got some big things happening in the grain markets, folks. We've been watching wheat for quite a while now, down at the 544 level because of that 1.618 level. I'm going to put the daily chart up because we're going to take a break here. We've got the Dow up 160 and the gold unchanged now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, folks, we are talking about the wheat market right now. We've had a very strong rally in wheat. It's been the strongest rally that we've had in quite some time because it's been down so far. We were mentioning this with our friend John from Philadelphia just a little while ago in soybeans, and soybeans have been the strongest of the complex. Wheat has been the weakest, and so we are keeping our eyes open and alert now because we're into the winter months now, and pretty soon we'll be coming into spring around the 21st of March, like it always does, and that's when we'll start looking at the planting intentions of what the farmers were going to be planting. And the last few years have been pretty profitable for us here at TFNN because we had some pretty smart people come on, like Rich Anderson from Anderson Capital Management, and also John from Philadelphia, to alert us that some of these patterns are beginning to look bullish. And that's the way it looks from the wheat market. We had this big move in wheat, which is an alert to tell us that we want to be ready to buy the pullbacks when they inevitably occur, and they usually do unless it's different this time. The next chart that I'm going to post is a chart of March corn, and as you can see, we made this beautiful butterfly about 10 days ago. We've had a very strong rally in corn, one of the strongest rallies over the past several months. We took out the last few weeks' highs, and now we'll be looking to maybe buy corn on a pullback for next week's TFNN commodity show. We'll be focusing on both wheat and corn and soybeans to see when these start to pull back, because as we approach the planting intentions, which occur starting in March, we really want to be there to see what the patterns are telling us. We're not watching the fundamentals so much, but we are watching the weather, because if the weather does get cold and wet, that means the farmers cannot get into the field to plant the corn, and so they'll have to plant more beans, because beans can be planted as late as June and still come out with a good crop. You can't do that with corn because it has deep roots, and it takes long for those roots to get down there to absorb all the water to make that. We've mentioned the price of cattle over the past several weeks, that it was making a big 3 drive to a top pattern. That certainly has done that. That had a high of 143 per pound in cattle, and we're now down to the 138 level here just in the past few weeks, and we still got a little bit more to go, we believe, on the short side of cattle, probably down to the 135 level. That's what the pattern is telling us with that. But the price of meat in the grocery stores and in your restaurants is going to get more expensive, and if it doesn't get more expensive, instead of buying 16 ounces per package, you'll be getting 12 ounces per package. And people don't look at that way, but they make the package look like it's a 1 pound package. But if you look at it closely, they shave off 25% because of the cost of the beef, and they don't want you to overpay for it, so you're just going to have to eat less of it. That's the bottom line. They've been doing that for years, but that shouldn't be a surprise to anybody. They do that in all sorts of advertising. The next question that someone asked is, when will I know whether the stock market rally will be over? I would like to tell you that, but if I did, I've been sworn to secrecy by the Federal Reserve not to reveal that information, because they didn't tell me either. And I don't think the Fed has anything to do with it. It's just a natural cycle of what we're watching. We had a monster break, folks. That monster break to the downside means something. It really does. So the question is, how much is it going to rally? My assumption is that we could go as far as Tuesday or Wednesday of next week. Live every day in an attitude of gratitude, and may God bless.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You're watching Tiger TV.